If your rent is $2,500 a month, you can probably buy a house for around $380,000. Same payment you're already making, except one version of the payment builds somebody else's wealth and the other one builds yours. Somewhere in the back of your head, there's this quiet story that buying a home is far off. I'm a licensed mortgage loan officer. I've been doing this for over 20 years. And I'm telling you that story is usually wrong. If you can carry a rent payment, you are a lot closer to a house than what the internet has led you to believe. I'm going to take that $2,500 rent check and run it backwards, the same way I do it on the phone with real people every week. Then we'll deal with the part everyone's actually scared of, which is the down payment. And then I'll be honest with you about the one catch nobody online mentions. This is education, not personalized advice for your exact situation. Rates move and your numbers will land a little different from the clean round numbers I will give in this video. The villain in this video isn't the bank. It's a story. Two stories actually, and they team up to keep good people renting for years longer than they had to. Story number one is that buying cost way more than renting. So people assume that a $2,500 rent means the mortgage on the same kind of place would be what, $4,000? They just feel priced out and they re-sign that lease. Story number two is the down payment. Everybody's got it stuck in their head that you need 20% down. On a house in our range, that's $76,000. So the dream just dies right there on a number that, and I mean, this is not actually a requirement. Those two stories are the whole reason you're still renting. Not your income, not your credit, just a couple of myths. Your rent is proof. Every month you hand over $2,500 and your life keeps working. That means you have already been passing a payment test over and over for years. So instead of asking, what can I afford? We ask a better question. If I'm already comfortable at $2,500 a month, how much house does that same $2,500 actually buy? When you own, that monthly payment has four parts. It has principal and interest, then the taxes and insurance. We roll all four together into one payment, and it's called PITI. And it's the honest number, the real all-in payment. So let's build it. On a house around this price, property taxes run $350 a month, and home insurance runs a couple hundred. Both of those numbers swing hard depending on your state. But for national numbers, call it a little under $600 a month gone before we even get to the loan itself. That leaves right around $1,900 a month for principal and interest. At the rates today, we're going to call them 6.5% on a 30-year fix. That's $1,900 a month. Carries a loan of a little over $300,000. With 20% down, that lands around $381,000 home. The same $2,500 you already send to the landlord. That's a house of $380,000. In most of the country, that is a real 3-bedroom, raise a family type house. Story number one, that owning costs way more than renting, is dead. The payment is the same. Two things. If this is helping, please tap the like button and subscribe if you want more of these videos. It would be much appreciated. It helps my channel grow and helps me get the message out more. I am a licensed mortgage loan officer. This is what I do all day. If you want to go through your exact situation, I have a QR code and the email on the screen. Give me a shout either way. You can book a call with me. We'll sit down and walk through the numbers. And if you want to run the numbers yourself, I do have a free payment calculator linked down below as well. All right, so back to it after that little announcement. So now the only thing standing between you and the house is story number two. You do not need 20%. 20% is the number that lets you skip one specific fee, and that's it. So let me show you the whole menu. Holding that same $2,500 payment fixed the entire time, so it's apples to apples. If you put 20% down, that's about $76,000 in cash, and you're buying that full $381,000 house with no monthly mortgage insurance. But drop it to 5% down, and now you only need $15,000. The catch is, because you're borrowing more, you're paying a little monthly mortgage insurance. That same $2,500 payment now stretches to about $307,000 house instead of $381,000. And if you go with FHA, you can get in for 3.5% down, and that's around $11,000. And you can land in the same $300,000 neighborhood for a home. So look at the actual choice in front of you. You can wait years to save $76,000 and buy a bigger house, or you can buy a $300,000 house this year with $15,000 down, start building your equity now, and trade up later. Neither one requires the mythical 20%. And now here's the honest trade-off, because I'm not going to sell you the low down payment option like it's free. If you borrow more and you pay monthly mortgage insurance, on a conventional loan, it comes off once you build enough equity. On an FHA loan at 3.5% down, it doesn't. That one rides the whole life of the loan. 20% down isn't just about skipping a fee. It actually buys you about $74,000 more house for the exact same monthly payment. But, and this is the whole point, less cash gets you in the door instead of never. For a lot of people, being in the game 5 years early is worth more than the extra house. And here's the one catch nobody mentions online. Your rent proves you can carry the payment. It does not automatically prove it to the bank. When you go to actually qualify, the lender doesn't just look at your rent history and stamp you approved. They look at your income, your credit, and your other debts, and they run a ratio. On the honest, comfortable version of that math, to carry a $2,500 a month house payment without sweating, you would need around $107,000 a year. Now, before you panic because of that number, here's the flip side. Lenders will absolutely stretch past that comfortable line. And that's not always a favor. That's sometimes the bank's max trap. I'll talk about that all the time in other videos, where they approve you for a payment that technically fits a spreadsheet and quietly eats into your life. Whether you can qualify on paper depends on those other pieces, and that generally is different for every single person. So let's go back to the $2,500 payment one more time and ask where the money actually goes. When you rent, $2,500 is gone. Over a year, that's $30,000 handed to the landlord, building their wealth. And next year, the rent goes up and you do it again. When you own the same payment, watch what happens instead. In just the first year, a chunk of every payment quietly pays down your loan. On our example house, that's about $3,400 of your own money moving towards the bank's column into yours in year one alone, and it grows every single year after that. If the home just keeps up with normal market, let's say appreciation of 3%, that's another $11,000 in your pocket. Add it up, and that same $2,500 payment built you almost $15,000 of wealth in a single year instead of $30,000 of nothing. Same payment, that's the entire ballgame. It was never about affording more. It was about pointing the money you're already spending at something that's actually yours. So here's the whole thing on one screen. Let's take a look at it. If your rent is $2,500 a month, that's about $380,000 house at 20% down, or $30,000 house for as little as 15% down, $15,000 down. Taxes and insurance move with your state, so your real number shifts a little, depends on where you live. And whether you qualify comes down to your income, your credit, and your debts, which is exactly the free call to me. The number that keeps you renting was never the price of the house. It was a story about 20% and a story about being priced out. You're already making the payment. Now you just have to point that payment at your front door. One last thing. If you want me to look at your numbers, the QR code and my email is back on the screen. They're also in the description if you can't get it off the screen in time. Book a call with me or email me. There's no pressure. We'll just walk through some numbers and see how things land. I'll see you in the next one.